All right, so in today's video, I'm going to be providing you guys with my long-term outlook on Nebius or NBIS, because over the past couple of days, we've had a pretty nice bounce here, and a lot of people are probably wondering, is the bottom in? You know, did I miss the low here down at 166, or am I going to get another chance to buy it there? So we are up on the day 16% here, but we're definitely not out of the woods yet, because as you can see, we just haven't broken any market structure yet. This could be the top right here, or we could go a little bit higher up to 230. The key level you're going to want to watch here on Nebius is the 230 level. If we can get a weekly close back above 230, then this is set up to go back to all-time highs. But 230 is very crucial here because it was the previous high before we broke down lower. Okay, so this was the previous high before we broke below this low right here. So until we're back above 230, then this could just be another lower high here on Nebius. And let's take a look at the price action it had earlier, not earlier this year, but late last year when it broke trend, and what you could kind of expect here from Nebius, because we can see that it had this trend line that it was respecting, right? It broke the trend, we got a close below, okay? And it's kind of similar to the price action we saw back in 2025 here, where we had this uptrend, okay? We broke the trend line, we closed below it, and then we ended up just going sideways for multiple months here before we actually got the breakout into new all-time highs, okay? So we could expect something similar here. We could literally be right here, okay? Right where we're at here on Nebius, we could be somewhere right around here. We're about to put in a lower high, and then we're gonna come back down, retest this low here, put in a double bottom, and just consolidate sideways. That would be some pretty nice price action on Nebius. And down here around this 166 level, 166 down to 141, I think is really good long-term value for Nebius if you can get it. So let's just pull out my drawing tool here, and you can kind of, let's just demonstrate what kind of price action that we'd want to see. So if this is the lower high here, coming back down and printing a low down here, coming back up, printing another low, and just buying down in this value here at 160, in between like 160 and 140, I think is going to be really good value for long term on Nebius. And the reason to why I think it's so good, let's take a look at an even higher term time frame chart here. Let's go to the monthly chart on Nebius, because the monthly is, it's going to give you the best signals and the least amount of false signals. So we can see right here, if we move this line up, we have a really nice fair value gap that we just tapped into here on the monthly chart on Nebius. So we can see right here, we had a gap between 200.91 and 168.81, and we just filled that gap in this month with this wick here. Now, if we go back down and tap into this again, then and put in a double bottom, I think that's a really good buy on Nebius here at the 168 level. And if we take out our fib as well, if you like to use fib retracements, if we go from the low here to the high, we can see that it's right around the 0.618. And in bullish markets, if you get a pullback to the 0.618, that's generally going to be a really good spot to buy. A really good bounce level in between like the 0.5 and the 0.618. So that's also why I really like this level right around here on Nebius, the 169, and then just all the way down to like 141 as well, because 141 would be a retest of the previous all-time high. And we can see that that's kind of what the price action looked like back here in this consolidation. We got a retest of this previous all-time high, and then we just based out around there for a couple months, right? So we came down, we tested previous all-time high, we just chopped sideways here for a couple months, and this was really good value for Nebius for the long term. So if we can get something similar to that, where we just make a lower high here, come back down, chop around for a bit, then DCAing in between 168 and 141 should be a really nice long-term play. And if you're a trader, the reason that you'd like to see it come back down here, make a double bottom, is because you can have a really easy invalidation for yourself. The invalidation down here was so easy on Nebius because we had it this low right here, okay? So we had the low at 78.18, and let's just pretend that this is the same scenario that we're in right now, where 164, okay, could be like where we were at back in November of 2025. So if that's the case, then what we could see happen here is Nebius could come back down to 164. It could spike the low, take the liquidity there, because everybody that's bought so far on Nebius, they probably have their stop below this low here. Okay, so if price were to come back down, it would take all that liquidity. And then if we got a close above like we did back here, a weekly close above, that would be a really nice buy signal for Nebius. So we had 3 really nice spikes into this low here, or 2 spikes into the low after making the low. We had the 1 spike right here, we had another spike right here, and both of these are really bullish candles on the weekly. So you could have bought either one of these candles, and your invalidation could have been a close below. So you buy this candle right here at like 88, and your invalidation is if you get a weekly close below there, then you're just out. And this provides some really nice risk to reward as well, because it's a like 15% drawdown there. And if you would have bought, you would have got a 237% move. So with good risk management, that's an extremely good risk to reward trade here. If we just pull out our risk to reward tool, and if we were to put in a long there, right, and your stops right below that low, or, you know, you got to give yourself a little bit of a leeway, because ideally you don't want to put your stop below that low. You want to wait for a weekly close below the low. So you got to give yourself a little bit of leeway here, maybe like a 25% stop. And then, you know, it's a 9R though. Like, this is an insanely good trade here on Nebius. If you would have taken it, a 9R trade. So looking for something like this would be most ideal on Nebius. If we just can go sideways here for a little bit, you know, bore everybody, take stops. Like, this was such a classic accumulation where we took the stops from this low. Everybody put their stops below 78.55. We took them with this candle right here. And then everybody who bought this candle put their stops right below this low. We took them again, and then we blasted off. So it was like a nice 3 drives into the low there, and then it eventually went up like over 200%. So I'm not saying this is going to happen again, and we could just straight up go back to all-time highs from here, but it's definitely a scenario that you should be watching for on Nebius, because I think there's a pretty good chance that we could come back down, make a double bottom here, and if you're buying between 165 and 143, then you should be in pretty nice shape.